All right, good evening, guys. Ken of Tortoise Capital. It's the nightly strategy podcast for March 24th, 2021. So I made some presentations today at an academic conference for the Association of Business Simulation and Experiential Learning. And a lot of it has to do with the things that we've learned about adult learning and developing professional knowledge during the COVID year. So trying to All right, this is Ken of Tortoise Capital. This is the nightly strategy podcast for March 24th, 2021. We're just going to go straight to the report. I'm tired of messing around. All right, so today we had a small gap up. It showed some initial strength and got to the spine of the dragon and sold off sharply to close weekly at the end of the day, right above the 10-day low, and having breached the 2.5% sell-off threshold, closing below the Bollinger Band mean, within a short travel to the Z-1. Today, the RL10, still in the summer, crossed the PSAR stop, and so the PSAR switches today. Now we have officially a downward bias. So tomorrow, if we see a violation of the 10-day low at 387, we should be all over that to the downside. So the one-day recovery couldn't even get out of the dragon and has now had two lower closes already. And now the RL10 belly and the dragon belly are within range on a one-day adverse move. So that's not good. In the sectors, pardon me, the S&P closed at minus 0.5. We had the tech down 1.7, completion index down 2.3, emerging markets down 2.3, the Russell down 2.31. The diamonds were a fractional into the green, 0.01, and treasuries up another half to 138. They're now within arm's reach of the key price level of 140, which has been pretty strong resistance for the past month. Sectors that worked today, wheat and precious, lumber, agriculture, and consumer staples all were in the red, but they lost less than the S&P. Bitcoin and finance were up a third. Materials were up 3/4. The VIX was up 0.9. Oil, exploration, and energy were up 1.5 and 2.5 respectively. Blended commodities with the strong energy component were up 2.6, and then oil itself up 5.3. The dogs, of course, taking due notice of that. To the downside, Mexico underperformed at minus 0.6. Commercial real estate minus 0.9, marijuana minus 1.05, Japan down 1.1, S&P Tech down 1.2, consumer discretionary 1.5, lithium down 2.5, Brazil 3.25, the FANGs down 3 1/3, Bitcoin 3.8, S&P Biotech 5%. ARC Genomics 5.2, Ethereum 5.2, blockchain 5.3, ARC Innovations minus 5.7, Clean energy back down to 90. So that's almost a 40% sell-off from the high point just earlier this year. That's how bad things are. Yeah. And now the symbols that underperformed. NEO down 10 and a quarter. The moonshots, the innovators, down 7.4. Virgin Galactic 6.5%. Tesla down 5%. Squarespace and PayPal minus 4.3 and 4.0 respectively. Twitter down 3.5. So the bloom is off of the rose. So not much safety anywhere. To the upside, the symbols that worked, however, were mostly in the materials sector. You had Alcoa up 5.9, Devon Energy 2 3/4, Caterpillar up 1.4, and John Deere up a full percentage. So not much to choose from, but clearly movers. A representative trade today. This one was in Mexico early in the day. And what I want to show on this one for today's quick lesson is the idea of the supported spring crossing. So we had a strong sell-off into the winter, as we like to look for. That terminates in the RL10 almost at Z3, crossing the baby dragon, crossing the dragon, the PSAR flipping, winter turning to spring, and so we have a typical entry here at 1, which is the supported spring crossing. It gets all the way back to the far side of the river and the VWAP, and then crosses over. There's a 1, 2, 3 exit in the spine of the dragon, or you could have taken a sniper down here at the PSAR. But notice the PSAR selling off, the PSAR flip showing strength, the PSAR flip once again showing weakness, the PSAR flip at 3. So trade 1 is the supported spring crossing to a sniper exit. Trade 2, we now have a higher low in the belly of the RL10 and the belly of the dragons at 3 with the PSAR flip. That makes this entry at 3 a CATA 2. Notice also that you have a Z3 pinch and now an expansion. And now notice the long, strong price move that is reflected in the behavior of the PSAR. The PSAR remains strong all the way through until you get what would have been a sniper exit way up in here, but you're still in the trade. So you have a CATA 2 entry. You have a Z3 excursion entry here where it gets a breakout from the previous Z3. In a way, that's also a CATA 2 because this little pullback, not even much of a pullback, doesn't even get out of the dragon. And then it makes a new high and takes out the previous Z3. So at 4 is where I like to add a position. And remember, when your stop is right here at the PSAR, you're already holding 2 execution R in hand with momentum when it makes the Z3 breakout. So that's a good thing. That runs all the way to 5 when you notice the summer rolls over, turns to fall, and crosses the baby dragon. I'm not offended if you take this exit at the PSAR, which is a bottom tick, provided that you re-enter here. Now, you don't have to re-enter 2 like I did, but I like this so much, and the sell-off was so brief that I put 2 back on right here as a CATA 2 entry at 6. As I mentioned yesterday, when you are buying on the south side of the VWAP, when the PSAR, which is marking a nice move here, crosses over the VWAP, crosses over the Bollinger Band mean, that makes this at 4 a very strong signal. And you should really be adding to the position here. Notice the The fair value in the RL270 bottomed out here and then is now starting to scroll up and adding strength long term. You notice the VWAP bottomed out here and now is slowly starting to increase as more volume and comes in at higher price. Notice the improvement in the RL90, which bottoms out here and then starts to roll up. And now you have it even crossing over the Bollinger Band. I mean, that's a very healthy sign for the long term. So that's what a nice trade series of chain trading in Mexico looks like. We'll shift to the daily and finish her up so we can be ready for tomorrow. I think tomorrow's going to be fireworks. All right, heading right to the dashboard. So now in the dashboard, what we have, we are still bullish normal, but now we are within 8% of the 200-day moving average. That used to be 25% stretched above the 200. Now we're back within 8%. We are only overbought now on the 270. The 90 and the 30 are just above average, no longer overbought. And we are significantly oversold on the 10-day and the 2-day. That triggers all of these overreaction signals and channeling signals, which require something to be above its 200-day moving average, but now oversold on a 10-day basis. And that's why all of these symbols in the global model are on sale with buy signals. So when you see that formation in the 10-day NDX, you really need to be mindful. We are, however, rolling over on the volatility, the same place that the markets got significantly weaker here. So that possibility for a downside move and significantly increased volatility just got realer today. So although we are risk on, this also was telling me to be mindful of the short side. Handful of good dojis today in the Dow 30. Only a couple 10-day NDX breakdowns and breakouts. So we haven't seen panic selling yet. We've got quite a few auto framers that test out very well, and lots and lots of channelings and overreactions to choose from. And again, those are high reliability signals. So I believe you can frame those and try them. I am partial to Boeing right now. It's a channeling and an overreaction and a 5-day down and a triple screen, and it's 3-1 on the auto framer, and it's only a score of 4 on RSI2, which is a indication of a short-term sell-off, harsh sell-off that is oftentimes an overreaction in a bull market. So that one is there. I would also say Disney is in the similar category, channeling, overreaction, and has a 7 on the RSI2. And at a breakdown on its 10-day NDX. In that same boat also is Goldman Sachs, channeling, overreaction, and a breakdown on the 10-day NDX. It's also a 5-day down, so Goldman has a lot to recommend it to our attention. In the ETFs, we had a handful of overreaction or oversold conditions where they were breaking down on the 10-day and the 1 month. Real weakness in the disruptor portfolios. You see blockchain got smoked. Moon and clean energy both got smoked. Lots of channeling and overreactions to choose from, and also plenty of auto framers. So this is really a buyer's market, and you should be judicious to the long side and picking and choosing the highest quality candidates. Quite a few RSI2 signals also firing. So that it takes a score below 10 for that really to take off. And again, you can see that in the bottom of the page there. Lots of auto framers to choose from. Not surprising when we were so close to the 10-day low. You've got Visa and American Express in the financial services sector. You got oil exploration, XOP, and XLE. Those are all really high quality candidates. I also like emerging markets and finance at these price levels. Since they are cyclic in nature and they both have oversold sharply, they may be ripe for a rebound if we get any kind of juice tomorrow. In the daily squeezes, Microsoft, Merck, and Walmart stand out, of course. All better than 2-1. In the MACD histogram, the MACD 4 seasons, you can see that fall is now starting to dominate as all of the gains that pushed to new highs just, 5 or 6 days ago have all evaporated and rolled over. Consumer staples continues to be the surprising leader of the pack in the S&P. And you can tell from the tail of the tape here in the multi-frame NDX summary just how broad the sell-off and the pain was today in a lot of the internationals. Emerging markets got smashed. Latin America got smashed. Brazil got smashed. The Euro-Asia Index and Mexico got smashed. In the Dow, really, it was just Johnson & Johnson, Home Depot, Chevron had the joy today. And that's everything I wanted to cover for tonight. I want to get this published and posted for you. Get your trade frames prepared for tomorrow. You get those posted in the chat room, you'll get feedback on them. And more importantly, it's the best way for you to push yourself to do your best work. So let me encourage you to keep taking advantage of that opportunity. And that's a good place for voluntary collaborative teams to work together. A nice way to collaborate, although of course you can always do that on Zoom as well. All right, that's everything I got for tonight, guys. Let's get this published and posted. And we will see you in the room tomorrow.